Hello, financial investors, and welcome back to the channel. My name is Brent, and today we are going to be doing our weekly recap for March 23rd through the 27th, 2020. We're going to go ahead and cover some of the news that was posted over on our Facebook page, some of the highlights of the week. We are then going to go ahead and cover the four main indexes, going over the performance here through the week. Then we're going to take a look at stock futures, which really do not mean too much right now going into Monday because it's Saturday as this video is coming out. There can still be news that is floated out here in the afternoon and on Sunday and in the early hours of Monday prior to the market being open. But after that, we're going to go ahead and take a look at the entire S&P 500 performance for this week. Big moves this week. I saw a lot of stocks out there, a lot of investors buying value on Monday and going up several double digit percentages. So, very amazing week. We're going to go ahead and take a look at financials, semiconductors, home builders, oil, the dollar, silver, gold, and then finish it up by taking a look at mortgage rates. This is just a very quick recap of the week in order to kind of capture this for a historical reference. That way we can kind of take a look back in the future to this date for these styles of events, how it has affected the market, and how it could potentially move once again another 5, 10, 15 years from now in this same way. So with that said, if you are brand new to my channel, have not yet subscribed, would really appreciate if you do hit that subscribe button below. I cover the stock market, dividends. If you enjoyed this video, find it helpful, entertaining, definitely give me a thumbs up right below, smash that thumbs up. And if you have any comments or questions at any time about this video, the stock market, dividends, or want to let me know what you purchased this week or are planning on purchasing, also drop that into the comment section below. And if you don't want to leave any of those, just let me know right now. Do you believe that next week will be positive or negative? Okay, let's go ahead and get into the video. So last Sunday, I took a look at stock futures. They were down in the Asian markets, and stock futures were down almost 4% across the board. You can see the NASDAQ was down 3.62%. Well, that had initially took place because of the bill that had not gone through the Senate and the House and signed by President Trump. But this week it has finally completed here on Friday. The Senate had signed earlier in the week. It had moved to the next step. I just said it, but I can't think of it. And once they had signed, the House of Representatives, I believe, once they had signed it, it then goes up to the president to sign or deny, and he signed it. So the bill is now in place that all adults making $75,000 or less will receive $1,200, and then up to $99,000 they'll be losing percentages up to there as individuals. And then if you're married with two adults, then you can make up to, I believe it's 199,000 or 150,000, and you'll get $1,200 a piece. Plus, if you have children, you will also get the $500 per child. So that bill went through today. On Monday, we released our video premiering. I like to release my Monday videos if they're very long, premiere with maybe an hour or two in advance to kind of notify everyone. That way, if you want to jump in, ask some questions, say hello, you can do that. Last week, Monday, by buying stocks, I bought $600 worth of stocks on Monday. That increased my total dividend income by $45. I then also sold stocks prior in the prior week, such as CVS and a few others, and by that reinvestment as well, increased my total dividends around $15. And all of those positions this week are up massive. I believe some of them, Main Street Capital, a BDC, is up nearly 40% this week alone. So crazy times here in the market. Now, from the bottoming out point, this is a post that I shared over on Instagram that I haven't really posted too much of my portfolio. That is just because I'm trying to move away from posting videos of it on a daily basis. I would like to come out and begin making videos of how to invest in stocks, how to do different things. I'm actually planning on making my own channel of myself, Brent Metters, in order to share it with friends and family and be a little bit more behind the curtains, present information, but don't present my financial data behind it. I'm not going to come out there with $100,000 portfolio and make videos about it on a daily basis. This will just be the how to get started in the market, what to look for, go over the basic fundamentals, different brokers, doing reviews, how to invest in stocks, real estate, etc. So maybe something a bit that way is how I'll be branching. I'll still be continuing this channel as a financial investor. But anyways, kind of going back to this, we could see here that in this just couple week period here, this portfolio on M1 Finance, my wife's Roth IRA, fell to a bottom. We had hit highs here recently of $21,130.27, and that was on the 19th of February 2020. As of this point here, we hit bottoms. Oh, actually, this is the high point right there, 324. Oh, it doesn't show me the date. Either way, so there was a bottoming out point here with that same amount of equity plus more equity that I have invested in this account since that highest point. We hit a bottom equity amount of $14,783.24. So that is a huge ride to the bottom. That's almost $6,000 of just equity paper loss in these positions. But it is now over 17 or 18,000 now at the very end of this week. So it has been jumping around, and I've been buying back quite a bit more shares. I do not believe this is the end of the volatility, and I am looking forward to being able to invest more. Had a viewer, commenter, subscriber mention that they were interested in UGI and had thoughts on potentially the payout being a bit risky. The current payout of UGI is around 50.27% with their current earnings. If they were to, for whatever reason, fall to their 2019 lows of around $1.60 for their earnings, that would put them at a payout ratio of roughly 81%, which, that could be pretty risky, but this is a utility company. And also, when I compare them to their common stock payout, they pay out roughly $22.6 million in stock payout to shareholders, but they cash flow roughly $396 million, and that would put them with a cash flow ratio of 5.69%. So either way, on their earnings, cutting back slightly, the payout would still be covered, or their payout ratio based on their free cash flow. I thought that was kind of interesting, so kind of wanted to share that here on the channel as well. Also, contributions for your 2019 has been extended to July 15th, 2020. So if you still haven't maxed out your Roth or your IRA for 2019, you are still able to deposit capital towards it up until the 15th of July. And I definitely recommend M1 Finance if you're just getting started. That way you're not getting the itch to buy and sell during the day. Leave that for more intermediate investors or the intermediate expert investors who know exactly what they're doing on a day-by-day basis. A lot of investors kind of get flustered seeing their portfolio maybe down 5, 10, 15% in a day, and will sell out of positions on normal brokers such as Robinhood or Webull, and they will take a taxable event plus they'll be locking in those losses. Whereas on M1 Finance, maybe you can talk with an individual about what you're planning on doing, and they can talk you out of making those hasty decisions. So I do think M1 Finance is a great platform for beginners who are just looking to automate and begin their investing journey, and that was an article there. So if you have been buying, continuing to dollar cost. Oh, okay, so just a little snippet there. Here, I believed we would hit new lows in the future in the VOO of around $192 to $195, putting us down roughly 45% from market highs. Now, this hasn't played out currently, but I do think we are in the future going to be moving around quite a bit. If we're looking at the VIX and we're looking at 2018 VIX numbers on a day-by-day basis during the time frame that they had the initial recession, and we look at 2009 VIX day-by-day charting plots, we are currently looking like we're still in the initial phase of this pullback, crash, correction, recession phase. So they're doing a lot of things right now. The endless capital being pushed into the market to try and keep this afloat, but you can only put you can only patch up your floaty so many times before you can no longer patch it. So I do think that we're going to have a little bit more volatility in the future, and we will retest those lows or even potentially break slightly below it. M1 Finance changed their rules here on Friday. Got a notification on my email that they're going to be raising the stock minimums that you can invest in. So if you have $10 was their minimum in the past, M1 Finance, you could take $10 and it might break that $10 into 5 or 10 stocks, or maybe an ETF pie that had multiple stocks within it. Well, that $10 would sometimes buy zero point zero 0.01 of, say, Exxon, or 0.05 of Amazon, and that would be 0.000000, an endless amount of zeros in order to buy that one share. So they did increase the minimum on a stock buy from pennies to now $8, and they increased the cash balance needed to auto invest from $10 to $25. I know for a lot of investors, $25 is too bad. If you do this on a week by week basis, just adding $25 a week, this will auto invest all your prior week dividends, plus it allows you to continue to dollar cost average into your portfolio. And $25, that may be cutting back on a lunch or a night out or a dinner or some entertainment, just one night of entertainment. There, $25, there's somewhere in your budget that you're able to cut that back on. Job numbers came out on Thursday, breaking an expected amount. It was over 3 million within the week that had claimed jobless claims. Thought that was very interesting. And the aid bill has imposed a 1-year ban on stock buybacks, and also companies are not able to pay dividends until they pay the bill back, and then 1 year after companies pay that loan out, they are able to pay out dividends. So I know here after the loan is paid off, a couple comments said that it was a bit severe. I do not believe it's severe. I think companies should not be doing stock buybacks if they don't have any capital on hand to help them during situations such as this. So Friday sell-off, flip a coin. Now there's really no way to tell here in the short term what we could. Oh yeah, there's the 3 million claims. What will happen in the market here in the short term? Because really anything, good news is actually bad. Bad news is actually good. We were talking about that in one of the Discord channels, that we could have multiple bad news kind of going on for the day, but maybe we've already had so much bad news priced in that the market is just recovering. And Thursday, Monday, what was it? Tuesday, the circuit breakers, portfolios that are normally 60% equities, 40% bonds. Well, we had hit such a low that the portfolios, the big hedge fund managers had to readjust their portfolios, and that caused a big chunk of equities to get purchased. And that chunk was on Tuesday, causing the market to slide up. And Wednesday, stocks, individual investors, and other fund managers adjusted their portfolios just a tad bit. And then FOMO on Thursday, as investors see the market rebounding double digits in a day, they just did not want to fear missing out on that opportunity, and they began buying just a little bit, and that's what we kind of saw there on Thursday. And then Friday, nice little pullback, nothing too crazy. We'll kind of cover that here in just a second. So that is everything that we covered over on Facebook. So here, S&P 500. So here, Tuesday, we hit such a low here on Monday that I believe after hours here on Monday, the portfolio managers, the ones that are managing large portfolios, they just saw that the equity is normally, depending on the brokers or the funds, sometimes there's 60% equities to 40% bonds, 70% equities to 30% bonds. So they had to make that readjustment at that percentage point, causing a massive buy-in to the market here at these bottoms. and causing Tuesday and Wednesday to kind of run up slightly. Thursday was the fear of missing out for just the general investors, I believe, and that's why we had another run up of a 6.24%. Friday, we had a bit of a cool off, having gained over 15% in a little over 15% there within the S&P 500 over a 3-day period, marking one of the fastest and quickest, you know, capital gains there within the S&P 500 and also the Dow. The Dow. I posted this, I believe, maybe it was on my personal Facebook page, but I know that we had posted. I know I posted it somewhere. It may have been on my personal page, but we had in the Dow Jones had gone up almost 34, almost 4,000. It was actually almost 4,000 points in a 3-day period. So this pullback here on Friday is nothing too scary. This is expected after such a pullback, after such a run up. So S&P 500 up 10.26% there in a 5-day period. The Dow Jones up 12.84%. The Nasdaq up 9.05. So you can see here that the Nasdaq is actually in the least, as far as in the back as far as the weekly performance, but they're also doing one of the best as far as year to date. Nasdaq is only down 16.39%. Now the Russell here is actually kind of rebounding as well, up 11.65. This one is and has been hit the most. All these national small mid-cap companies that have had to close their door, basically lay off their employees, and are no longer making any sort of revenue, they are getting hammered pretty hard. So down 32.15 for the year to date. Stock futures here, as we can see here, they're not going to be showing too much right now. That is because we still have Saturday, we still have Sunday, we still have early morning on Monday to really have any new sort of news floated out. I know a lot of stuff has been happening on Sundays with new bills, with new Fed announcements, and all sorts of changes. So we'll kind of see how futures are actually going to be here on Sunday night as we're doing our Monday's buys video. Now, as far as the weekly performance, let's see if I can just zoom in here just a tad. There we are. So this is the weekly performance. Amazon already trading near all-time highs already. You know, it's at $1,900. I believe as these stimulus checks are going out to individuals and they're not really wanting to go out, you know, they're still going to be quarantined for the next few weeks. Still another 2 weeks of quarantine. I'm not sure when we're going to get, the first checks rolling out, but I don't think a lot of individuals are going to be going out to the stores in order to shop. I do believe there's going to be a whole lot of online shopping. So I do believe Amazon is going to take a nice upwards movement due to that. Also, we can see just about every sector out there, even oil, is up nicely this week. So Exxon up 12.86%, Chevron up 15.81%. Johnson & Johnson really hasn't fallen a lot during this whole process, so they're up slightly in comparison to the rest of their Merck, Pfizer, AbbVie. I know AbbVie in my other portfolio caused me to go positive on Friday really nicely. Eli Lilly down towards the bottom. Over in the technology, Google, Facebook, Twitter, and VeriSign. Microsoft up very nicely. Just everything across the board, very bright here. I really like to see these bright numbers, but I don't know if I'd like to see more bright or more red. I would actually like to see more red here in the short term, just because it'd make me have more opportunity. I really haven't deployed as much capital as I would really like. I've actually opened up a taxable account over on Fidelity and do plan on depositing some capital into a taxable account and actually starting some long-term purchases within a taxable account, because the Roths are going to be maxed out early, and then I'll just have extra capital, just kind of leaving my emergency fund for about 6 months to a year in a high yield savings account over at Vero, I believe. Vero. I know there's a couple different ones out there, but financials this week up 11%. Ticker symbol is XLF. So we already saw some of the financials here in this area go up very nicely. JP Morgan buying back more of the shares, up 9.14 on the week as well. Bank of America 9.1, Wells Fargo 14.26. Now over into the semiconductors. Here's the some portion of the Nasdaq here. up 12.79%. So if you're looking for where the market's sort of moving here on a given day, you can always take a look at financials and semiconductors. If these are positive in the day, you'll pretty much see the rest of the indexes kind of follow along with these. Also, home builders up a nice whopping 19.53%. This one actually surprised me. It did go ex-dividend here on the 23rd, which was just this Friday. No, it wasn't. It was Monday. So it went ex-dividend on Monday. Oil, this is an interesting one. We already saw so many of these oil companies over here go positive this week, whereas USO, this ETF for oil, is actually down for the week, down 9.51%. So I'm actually a bit interested to kind of see, maybe, yeah, this is oil overall, but I would think that oil being positive would cause some of these companies to go positive as well, but that is not the case. The oil is still moving down, whereas the oil companies themselves are moving positive. The dollar maybe weakening just slightly as investors are, last week we saw the dollar moving over 100. I had a comment in the comment section below saying that with the market being so low, cash is one of those safe havens that investors have moved to just to kind of wait for bottoming or waiting on an opportunity in order to invest. Here, this is potentially moving lower on the week just due to there being opportunity on Monday. Lots of cash is moving out into equities in the stock market, causing the dollar to kind of fall here to 98.31 right now. Silver up a whopping 15.71%. I said last week that I believe silver would get a nice huge run up, especially being down in that $12 range there as we closed on Friday and open in the $12 range on Monday. This quickly got bought up here at 15.71%. I know a lot of investors are buying up silver. Gold up 8.71%, basically the same there. I think it's almost at highs. Let's go look at the 6 month here. So you can see here it almost broke back to its highs here. It's at 152 and 155. Actually, it ties here at 159. So it's only $7 away from its all-time high. So I know gold has had a quick snapback, and that's what a lot of investors believe is when it is going to take place with this market. We just don't know where the bottoming out point is. We could potentially see that bottoming out point taking place now, but I would like to see a retest of this bottoming. Maybe retesting this, and then once we do retest that, we find ourselves are stable. Jobs are beginning to reopen, maybe possibly in the future in April. We should move higher. And bonds up this week 4.73%. Mortgage rates fell just slightly from last week. They were at 3.88 a week ago as we did our recap. Now they are currently around 3.75. If you're shopping for rates, this is still a good opportunity, great opportunity. I know if you're locked in those old rates of 4.75, 4.25%, you usually want to just check around, see if you can get a rate of 1% lower than where you're at, and just do a mortgage calculator to see if it is worth, if you're going to be there, how long. It'll kind of do the math for you based on how many more years you plan to live in your home. Do the refinance cost make up for that difference in your mortgage price? Or if you're just planning on keeping it as you move as a rental, it always makes sense to kind of refinance to a mortgage rate of 1% less or more. So that is basically all I wanted to cover in today's video. Just a very nice quick recap of the week. So let me know in the comment section below. Again, what are you thinking about this week? Are you planning on purchasing anything? Are you kind of just waiting? I know on Monday I will be doing another Monday buy. Kind of looking back, I had wished I had invested more capital last Monday, maybe had actually done my full investment that I had initially planned for on M1 Finance, but I went ahead and just dollar cost average, split it up into fours, that $2,200 in there, put $600 in first. Maybe I'll do another $600 this week. I'll have to take a look at what we're going to be looking at and buying here on Monday. So let me know in the comment section again, what do you think this next week is going to be, just positive or negative? And maybe some of your reasoning behind it. How was your week this week? Let me know as well. And again, if you did enjoy this video, find it helpful, entertaining, definitely give this video a thumbs up. Really appreciate it. Subscribe to the channel if you have not. That's 75% of you have not subscribed. And also, just leave me a comment saying hello and all that fun jazz. So that is it. Thank you all for tuning in. Thank you all. I will see you next time. Bye.